Here's the thing about risk.
Views and opinions that are shared on this video or audio should not be taken as financial advice. I'm not a financial advisor, nor am I registered with FISCA.
There's a difference between risk and volatility. There's a difference between risk and volatility. A lot of people are afraid to invest because they're afraid of the risk. And how do they judge the risk? They look at the volatility of the company. They look at how the company has been going up and down, but they don't look at the analysis and the statistics of the company so they can make a decision which is well educated. But they compare the two, and they say it's a risk for me to invest in this, of which sometimes it's not wrong, but in most cases, you cannot compare risk and volatility, because volatility just tells you about the health of the company, how the company has been performing since day one. So you'd find that the company, when it started, it was here, and after 10 years now, it's here. But in between the first year and the 10th year, there has been the ups and down, ups and down, ups and down. And you'd find that in the fifth year, maybe it hit 2019 hit and it went super low. The company lost so much money, and 5 years later the company is so high. And so when people think about investing, when they look at the structure of, not even the structure, when they look at the the health of the company, they compare that health with the volatility, and they would take maybe a couple of months or a couple of weeks, and they would see that the company has been so low for a couple of weeks or a couple of months, so it's not worth investing in, only to find out that if you go to the beginning and compare the beginning and where the company is now, the company has went through a huge amount of growth, which says that the possibility of the company growing from there until maybe 10 years later it will be again way up, is very high. But what I'm simply saying, do not confuse risk and volatility. Do not confuse risk and volatility. Here's the thing about risk. Every time when you step out of your house and you say that you're going to work, whether you are employed or self-employed, you are taking a risk. You are taking a risk with your car, with your life, with your ideas, with your hopes and dreams. You are taking a risk with your finances. You're not sure if when you get to work you're going to get retrenched. You're not sure if your ideas are worth it. You're not sure if you're going to hit another car along the road, then you're going to have to get another car. You're not sure. What I'm saying is that in life there are risks. But in order for you to be able to get that money at the end of the month, you have to wake up, bath your kids, make sure your wife is ready as well, and you leave and you go to work so that you can be able to earn that money. So everything that we do is a risk. So what we are challenging you to do is that you need to be able to think beyond the risk. Yes, this company might not perform well. Yes, this company might drop in the next 6 months and it will feel like it's the end of the world. But in the next 10 years, rather, the company might grow, and I might make millions. So my wife and I went through partially our investments, and I looked into one of my investments, the co-shares, and co-shares has been performing badly the past 2 years, and actually last year it's considered one of the lowest ETFs in terms of performing and dividend yield. So it was considered one of the lowest. But when I looked at where it is today, where compared to when I started investing, I have made a bit of money. So I thought to myself, wow, when I invested in this company, I judged it according to the risk. I looked at the volatility of the company. I didn't look at the statistic, the analysis. I didn't look at the shareholders who's owning this ETF, and all those things. I didn't do a thorough research. But now look at where the company is now, and I have made a couple of bucks. So what I'm saying to you is that you might invest in an ETF or in stock or in a certain portfolio, and the next couple of months might feel like hell, or the next couple of years, maybe 5 years, might feel like hell. It's dropping, it's dropping, it's dropping. But a couple of years later after that, it might be high as clouds, and you might see your profit, you might receive your profit. So what I'm basically saying to you is that don't compare risk and volatility. Whenever you go and try to invest in a company, don't say this company is a bit of a risk because you're looking at the volatility. Just make sure that you go to the statistics, you go to the analysis, you go to what financial advisors are saying and so forth. You research thorough and make sure that you have enough information. And after that, you predict where the company would go in the next 10 years, 20 years, 30 years. And if you are right, then you would make a profit. So what I'm saying to you, there's a difference between risk and volatility.
Thank you so much for watching our videos. Make sure that you hit that subscribe button, the notification button, and also that like button. Also, make sure that you comment below so that we can be able to have conversations about everything that we learn.